Okay, let me just let the group know that we're live. All right. Hello, everyone, and welcome to a special Sanbase Pro webinar on how to analyze speculative demand and sell-side activity with Sanbase. So this is going to be about a 40-minute long webinar with time for audience Q&A, any questions that you would like to ask us, any sort of analysis that you would like to do, what you would like us to do, let us know in the comments and we'll get to it after the sort of exposition part of the stream. So the topic of the day is how you can use Sanbase and sentiment metrics to analyze, in particular, speculative demand and sell-side pressure, shifts in sell-side pressure and rising or declining speculative demand for a particular cryptocurrency. So in this webinar, we are going to be using several metrics that are available on our platform for Ethereum, Bitcoin, all ERC20 coins, and a few other coins as well. This is mostly going to be the following metrics: daily active deposits, exchange inflow, and then we move into network value here to get to MVRV 30-day, MVRV 365-day, and network realized profit or loss. So these are going to be some of the metrics that we are going to be focusing our analysis and our discussion on today. There have been quite a few new users in the past couple of weeks for us. So some of these things are going to be sort of, as much as we can make them, beginner friendly. We are going to try and expand on as much as possible on some of these topics for people that are already familiar with them. But at the same time, we feel like there's a need to introduce the new users, the new Sanbase Pro users, to our platform a little bit more, and to talk about how they can use some of our more popular metrics in their day-to-day analysis. So before we jump into some examples and we start talking about metrics, Max, do you want to kind of introduce yourself and let us know what this webinar is going to be about?
Yes, thanks, Dino. No introduction. Okay, I'll introduce the founder of Santiment. The purpose of webinar, or the purpose of when we write insights, it is like twofold. Of course, pragmatical. We try to help and give, when it's appropriate, buy or sell calls or ideas. But there is always a deeper and, in our opinion, more important part. So secondfold, it is about sharing with you and listening for you when you are coming back to us, how to build the proper context to what is happening in crypto. Why is it important? Because the temptation for every human brain is to simplify things. Yeah, and in trading, it comes very fast. Okay, what is a buy or sell? What is a buy or sell signal or metric or whatever? It will happen to each of you. It happens to us from time to time too. That we simplify things as much as possible. This is the nature of the brain. Otherwise, we cannot live in this reality. But in trading, investing, and especially in crypto, we should always be aware and push it away from us. It's not about simplification. It's seeing through the noise and building context what is really happening now. Because you will see in examples, the same metrics, the same values, they mean different things when we are picking up, building tops, when we are bottoming out, building bottoms, and when we are turning from one state to another. And unless you understand how to build the proper context, you will not be able to use neither our metrics, not any single metrics in the world, and don't fall into the idea that there is some magic bullet or how to say crystal ball who tells you now buy and it will surely goes up. No, it doesn't exist. Yeah, so we should not chase what doesn't exist, and we should not simplify it too much when we analyze the market, because it costs too much for us. It's okay, we will always make wrong decisions, and we will always make, each of us will make sometimes wrong calls. That's completely normal. But we will reduce this amount dramatically if we, whatever metrics we are looking at, we keep in mind, okay, this is for us to understand how majority of market behave, how crowd, what are they doing. All metrics we will show, they're just for this purpose. what the crowd is doing. And once we understand what they're doing, and we know, okay, this is what happened to the price in the last few weeks, then we probably know what's coming next. Yeah. So, Dino, please continue. I think this is very important to keep always in mind.
Absolutely. And just, I guess, a few more disclaimers. Number one is that nothing we say here should really be construed as investment advice. The goal of this webinar is to kind of show how some of the metrics that we've developed over the last 3 years, how we like to use them from time to time, and some of the patterns that we have noticed begin to form in these different metrics based on the cycle of that the market is in. Some, as Max said, some of these metrics will mean different things and can impact the price in different ways based on the general market direction. So what we're going to do is we're going to start with this first metric that's available under the exchange category here. So basically everything, guys, that we are going to be talking today about today is going to be nested under the on-chain category here. So for additional webinars, we are going to be talking about social data, derivatives data, other sources of information that we have. But number one, I think our bread and butter is definitely on-chain and social data. So on-chain data is kind of a no-brainer to start with. And based on your polls or the polls that we've done, most of you seem to enjoy or want to learn more about speculative demand in particular. So to find these metrics, go to on-chain and then navigate to exchanges, which you'll find here. It's a subcategory of on-chain data. And we start with daily active deposits. So daily active deposits, as you can see here in the tooltip, by the way, every metric on our website has this sort of informational tooltip right next to it so that you can learn more about what it means. And there's usually a link to more information about how the metric is calculated and additional use cases. Right? So daily active deposits is a metric that shows the amount of unique coin deposits, the deposit addresses daily. So what are deposit addresses? Let's start with that. Essentially, when you are sending funds to exchanges, in this case, Ethereum, right? That Ethereum doesn't immediately or directly go to a hot or cold storage of a particular exchange. First, it hits what is called a deposit address, which is an interim address that belongs to exchanges whose sole purpose is to funnel money to exchanges, right? So the entire and only purpose of deposit addresses are to move money to exchange wallets. And therefore, by tracking these deposit addresses, we can kind of use them as a proxy for wholesale speculative demand or the amount of sell side pressure for a particular coin. So I have a number of different examples here prepared. I will share a link to this document in the Sanbase Pro group after the fact. So if you are a member of a Sanbase Pro group, if you have an active Sanbase Pro subscription, let me know, or just be a part of this group here in Sanbase Pro, and you'll be able to get access to this particular document. So let's start with a few chart setups using daily active deposits and kind of how they illustrate the dynamic between daily deposits and general speculative demand and a price of a particular coin. So some of these aren't necessarily going to be up to the today's date. We can do real-time analysis if you guys want us to for particular coins, but this is mostly about showing particular points in time when these addresses where these metrics have had an interesting correlation or impact on the price action. So here we're looking at the amount of daily deposits for Ethereum between July and December of 2020. Here parked in or colored in brown, and then in green is the price of Ethereum to boot. So some of the things that we noticed quite often, and especially when it comes to mid-size alts, which are much more easy to move, so to speak, is that these rises or this sort of sudden upticks in daily active deposits, especially during a price rally, as you can see here on September 1st, right before a market-wide correction. And as you can see here on November 24th and November 30th, pretty much at sort of the same levels, even here before this short-term correction before the price recovery. These moves or these spikes in daily active deposits during a rally usually indicate a rise in sell-side pressure, a concerted effort by a number or a increasing number of market participants to get out of the market or this particular coin, start taking profits, and exit their positions. As a result, this rise in sell side pressure can often have, especially during rallies, can have sort of adverse impact on the price action. Now, a little bit later on, we will show some examples where these spikes in daily active deposits aren't necessarily the worst thing in the world for a coin, especially when there is a downtrend, when a coin is in a price downtrend and we notice these spikes in daily deposits. That usually points to short-term holder capitulation, and as a result, like for example, somewhere around here, I guess you could say, or here, which usually point to short-term holder capitulation and tend to earmark local bottoms. But when we see these spikes in daily deposits during price rallies, it's usually a very difficult proposition or a very difficult challenge for, in this case, Ethereum bulls to absorb this rising sell side pressure. The reason being is that this rising, first of all, this spike in sell side pressure occurs over like 24 hours, and it occurs during a price rally. So in order for Ethereum bulls to absorb this pressure, they need to be very much convinced in the short-term price potential of Ethereum. However, do keep in mind that this is after Ethereum has already kind of gained usually between 10 and 20% in the last week. So they would be okay, or they have to be okay with buying Ethereum in this case at a high premium. And if there is not enough buy pressure, especially at these high prices, which there usually isn't, then the spike in daily deposits can kind of prove to be a challenge or an obstacle to a sustained price rally. And you can kind of see that on several examples here. I'll share a few additional examples for this. I have a few popular ERC20 coins ready here for these. To showcase these particular patterns. So for example, we can see here for Chainlink, we can obviously see a massive spike. This is between September and December. So a 3-month high in daily deposits coinciding with Chainlink's price correction. But we can also see a number of smaller spike coincide with small or short-term price corrections as well. So in general, spike in daily active deposits doesn't necessarily need to be a quote-unquote nail in the coffin for a coin's short-term price action. However, it usually does lead to at least a interim consolidation or downtrend before we before we can move forward and before the price can recover, obviously assuming that all other fundamentals agree. So I'll show a few more examples, and Max, if you want to add anything else about daily deposits as I show some of these charts, feel free. So here we can see iFi in this case, and this is one of the examples that I wanted to showcase where we also see spikes in daily deposits during bottoms. So iFi is one of the currently the most popular, I would say, DeFi related coins. And here we are tracking the amount of iFi deposit addresses that are active on a daily basis. So the more active iFi deposit addresses, more people are sending money or iFi to known exchange wallets, right? So you can kind of see these rises in sell side pressure during iFi's, well, I think this is all-time high tops for iFi because it's fairly young, in August and September, as well as several spikes here in November 19th, as well as December 2nd before the inevitable sort of or short-term correction. However, on the other hand, we have seen these sort of spikes in daily deposits here as well as here at iFi's local bottoms as well, which, like I said already, tend to also point to a short-term correction, or sorry, a short-term holder capitulation, as people seem to be, at these points, people are taking profits, right? And however, at these points, people seem to be completely flooding out of the market, seem to be unaware or unconvinced of iFi's price potential in the next couple of weeks, let alone months, and therefore seem to be exiting out of the market. So we usually tend to like to see these sort of semi-high spikes in daily deposits during downtrends. We've actually written a few insights based on this particular sort of pattern. One insight that sticks in mind is the one we wrote about Ren. So let me show you. Okay, I think it's this one, right? So you can see here that we said the REN approaching key levels, right? When you read this insight, and we can link to it in the stream, one of the first metric that we point to is this rising amount of daily deposits after sort of a month-long decline. We are seeing a little bit of panic selling at a local bottom for REN. Obviously, there has been a massive sort of uptick in daily deposits during both of REN's August and September price stops, respectively. Even here during the June rally before the consolidation started, we had a massive rise in daily deposit. However, seeing these mini spikes in daily deposits during these downtrends tend to indicate that there is, in fact, a little bit of market pain, a little bit of uncertainty and FUD. Encountered in REN's on-chain data, which is usually healthy and necessary for the price action to bounce back, especially if there's enough buy pressure, which at these levels is much more likely to happen than at these levels, right? Because at these levels, REN bulls are, I think, much more likely to be able to absorb this rising sell side pressure because they would be accumulating coins at a massive discount rather than buying at a premium, which would happen here. Right. So we pointed to the fact that there's been a rising amount of daily active deposits for REN. And shortly afterwards, REN bounced back. So let me go back to the price chart once again, so you can see it live. So our insight was written here, right before REN started breaking out. Now, obviously, these patterns aren't necessarily always going to be as, let's say, prominent or as apparent or as reliable. However, these are some of the things that we have noticed over time tend to carry a lot of weight. If you look at REN's three highest price tops in the last 6 months, you will see all three of them being earmarked by a notable uptick in daily deposits, which makes perfect sense. It just points to a number of market participants, REN's market participants, starting to become anxious about its, price potential, about its rally. This is usually, I think this was about plus 150% profit. I think this was, price gain. This was about, I think, 70% price gain. So at these levels, people start exiting the market and taking profits, and that can obviously, have an impact on the price, right? So since we're already sort of 20 minutes in, I'll leave some of these examples for you to check out in the Sanbase Pro group after the call. Before I move into Exchange Inflow Max, anything you'd like to add in terms of how to use daily deposits as a metric and generally how to use our exchange-based metrics?
Not much, just you will cover now with Exchange Inflow and the daily deposits, it's amount of active addresses. So
Yes.
to say how big is the crowd. Yeah, exchange inflow, how big is the flow? Yeah. So keep it in mind. Exchange inflow is transaction volume, so to say, and deposit it's amount of participants in this transaction.
Exactly.
And keep it in mind. The bigger the crowd, the better. Like in all behavior analysis, the best results of analysis then the crowd is big enough, at least. Okay, I will not say exact numbers, but examples were given. They represent big crowd, of course, Ethereum, but also like iFi, REN, they're big enough. But if you try to apply the same methods for coins where there are only 20 addresses, not necessarily will work. You would rather use a bit different and actually much simpler analysis.
Yeah.
And so you apply it to the coins. There should be at least 20, 50 million valuation, and there should be enough transaction volumes. Then it works very nicely on business.
Yep, I agree. And this is, I think, one of the reasons why I kind of isolated some of the more popular coins, because the more activity there is on the network, the more prominent a spike in daily deposits, the more likely it is that it will impact the price in a certain way. So, like Max said, the point of daily active deposits is to only show the total amount of addresses that are moving, in this case, Ethereum to exchanges. However, we are still not sure exactly how much Ethereum is being moved. Every address can send between it can be 1 Ethereum in each of these addresses moving to exchanges, or it can be 100 Ethereum. It's very interesting or very important to also know the total amount of a particular coin that is being moved to exchanges, so you can kind of analyze relative sell side pressure that is being exerted on this coin. So that is why we use exchange inflow. So you can kind of, zoom in here or hover over this informational tooltip, and exchange inflow shows the amount of a particular coin that is moving to known exchange wallets daily. This excludes, by the way, exchange to exchange transactions, which is very important. For example, if which happens pretty much every day for every coin, Binance likes to kind of move money from Binance One wallet to Binance 4 wallet pretty much every day for sometimes no apparent reason. And if we were to include these types of transactions, it would skew the data entirely. So in this particular case, or for this particular metric, we are only looking at transactions from what we have labeled as individual or private addresses to what we have labeled as known exchange wallets. And one additional point to mention here is that we have just recently also added support for Coinbase wallets in this particular metric. So not only can you look at the total exchange inflow or outflow as well, not only can you look at the, in this case, total amount of Ethereum that is being moved to all exchanges, including centralized and decentralized exchanges, you can also do more granular analysis by clicking on metric settings here, and then selecting exchanges, and then picking a particular exchange that you would like to see. So for example, if I only want to look at the amount of Ethereum being moved to Binance, this is what I would get. And what do you know, we would see some rising, very sort of prominent spikes.
Actually, you pick up by chance very good example.
Yeah, very good example. Sometimes it happens, I mean, also obviously, also it's because of Binance. So there's also quite a lot of speculative activity and a bunch of not necessarily smart money on Binance, but it's always I think a good example to show. So for example, in this case, you see there's quite a lot less noise than if you look at all exchanges, both centralized and decentralized, and there are spikes in exchange inflows here before a price correction, here before a consolidation period, and also here very early or shortly before we dumped. We had a market-wide correction here. So for this particular case, I'm going to look at all exchange inflows, so including centralized and decentralized exchanges. But if you would want to, you could also do granular analysis. And for starters, I would suggest looking at exchanges like Binance, Bitfinex, Coinbase, Uniswap, SushiSwap. These are the sort of centralized and decentralized exchanges that are probably going to have the most sort of activity on them, and B, are probably going to point to the most interesting sort of patterns. So here we're looking at a 4-hour interval of exchange inflow for Ethereum. So first of all, let me zoom in a little bit, just so you can see what this looks like. Obviously, like I mentioned a minute ago, when we see these spikes in daily deposits, and especially if there's a coinciding spike in exchange inflow, like we see here, this points to the fact that not only are a lot of addresses moving Ethereum to exchanges, but there's also relatively a large amount of Ethereum being moved to these exchange wallets as well, pointing to a concerted sell-side pressure, not just by the small market participants or retail market participants, but also by large Ethereum addresses. And then we can see sort of the same pattern. I can check this out in light mode so you can see it a bit clearer. So big spike in daily deposits coinciding with the spike in exchange inflow, and then a similar thing on December 1st, major spike in daily deposits coinciding with a spike in exchange inflow, right? During a price rally, obviously going to be very difficult or more difficult for this sell side pressure to be absorbed, because people would be just think of yourself in this situation. Would you be okay with buying Ethereum at 615 if it was 507 5 days ago, right? Just consider whether this amount of sell side pressure is going to be as easily absorbed as it would be somewhere around here. Okay. So another thing that I wanted to show, however, is like we said, similar to daily deposits, when you see spikes in exchange inflow during these sort of downtrends like we've seen here, and like we've seen here during a early September market-wide correction. So the entire market, if you remember, crashed on September 1st. right? And since then, we have seen this sort of cluster of exchange inflow spikes in the next couple of days, pointing to a wholesale capitulation by Ethereum holders. So when we see these types of spikes, especially during the downtrend, like we mentioned a minute ago, it can point to a sort of a healthy amount of fear, healthy amount of lack of confidence in the price action of a coin. And if there's enough bullish presence in the market at these sort of levels, there's a chance that this sort of spike in exchange inflow can be absorbed, rejected, and lead to a price recovery. I think we have seen pretty much the same thing during the Black Thursday. Yeah, there we go. Once again, there's been a massive amount of sell-offs during Black Thursday as well, pointing to, so you can kind of see marking bottom here as well. And then you can also see them marking the local tops for Ethereum here and here as well. So these are the types of moves that we like to look at when analyzing exchange inflow. I have a few more examples that I want to show. Maybe let's I guess let's use Uniswap. Uniswap is always a nice example to look at. So in case of Uniswap, and let me full screen it. In case of Uniswap, we have seen massive clusters of exchange inflow spikes here during a downtrend, as well as here. So if you kind of look at the most dense parts or stretches of this exchange inflow for Uniswap, this is a 3-month view. You will notice them kind of coinciding with short-term bottoms here as well as here. And then once again, during an uptrend, it's a completely different situation where we see these sort of rising sell side pressure for Uniswap when it's already kind of crossed the $4 mark, which is much more difficult to absorb, right? Let's use another example in case of maybe Ren. Ren, another very popular ERC20 coin. Major spikes in exchange inflow during local tops here as well as here. However, you can also notice not isolated, but rather prominent spikes in exchange inflows during local bottoms for and here, as well as here. So once again, the amount of funds moving to exchanges for a particular coin is going to mean different things, or at least we kind of see them very often meaning different things depending on the move of the market or that particular coin. When they spike during these sort of massive upticks or rises in price, they usually are going to be more difficult to absorb. The sell side pressure is unlikely to be immediately bought up by Ren bulls. However, if they happen during this sort of prolonged downtrend, it's much easier for bulls to start to buy these coins back at a discount, buying the dip, therefore rejecting the spike in exchange inflow and leading to a short-term price recovery. So these are a few things that I wanted to point out. Let's finally look at Wi-Fi or iFi. And you can see a major spike in the iFi's exchange inflow during both of its recent bottoms. Here on October 8th, I think this was the all-time low at this point in time. And then there was another all-time low here. Both times during a major downtrend, we have seen quite a bit of lack of confidence in iFi shown by their network participants. However, anybody that knows iFi knows that it can very often be a whale game. So there's definitely there was definitely a whole lot of whale buy pressure happening in these two junctions, pointing to or helping the price of iFi bounce back very quickly afterwards. So in conclusion, when you're looking at these two metrics, daily deposits point to total amount of addresses that are moving funds to exchanges, and then exchange inflow points to total amount of that particular coin that you're observing that is being moved to exchanges, right? Both of these metrics are important to look at, especially when you're combining them, for example, like I showed in Ethereum, especially when you see them working in tandem like they did or during the last two tops for Ethereum here. Well, obviously disregarding this one. And once again, we see, if we are going to do some impromptu market analysis, we are seeing a major sort of rise in Ethereum's exchange inflow at the moment. Might be a bit too early to call it or anything, but especially because daily active deposits seem to be lagging a little bit behind at the moment. But these are sort of the yellow flags that you want to look into when analyzing a particular coin. Obviously, there are other metrics to keep in mind. None of these metrics should be, relied on exclusively, but you need to kind of look at the entire market and the fundamentals, all available fundamentals and sources of information for a particular coin. But yeah, if, for example, these types of spikes in exchange inflow coincide with other bearish markers, both in your TA and other on-chain metrics, it could be a possible time to reassess your exposure in a particular coin. Okay, before we move on, Max, anything that you would like to add as far as our exchange metrics are concerned?
No, all good, all good. Let's try to cover, holistically everything we planned for today. And yeah, because, when going for each specific detail and metric, it's very easy to see the trees, but lose sight of the forest. And we don't want this because of now current price territory.
Yep.
We really want to see when the top will come.
Yep. Sounds good. Okay. In that case, let's move on to network profit and loss. So network profit loss is a relatively young metric on our website. We've introduced them, I think we've introduced it about 3 months ago. And what it does, and I'll use it for Bitcoin in particular here, because it is more reliable sort of for some assets than for others, just because of the way that it is calculated. So let me first show you what it does, and then show you the explanation. So what network profit loss does is it computes the average profit or loss of all coins that change addresses daily. So essentially, this is pointing to a network level daily ROI. So the average or the total ROI if you were to use all of the coins that moved on the network on a daily basis. So the way that it works is that for each coin that moves on chain, network profit loss takes the price at which it was last moved and assumes this to be its acquisition price. And then once it changes addresses again, this metric assumes that the coin was sold, right? So obviously there is a big assumption being made here. And this is why we think this metric can work better for some coins than others, especially for coins like Bitcoin, which is usually sort of used as a means of payment rather than for a number of additional use cases, like, for example, Ethereum, right? But the way that this metric works is, let's say there was a bunch of coins that has last moved here. So we assume that they were bought here. And then if they were moved again here, this metric would spike significantly because it would point to a large sort of profit-taking event, because coins that were moved here were purchased at a very lower price, historically speaking, and therefore they tend to point to periods of excessive profit-taking. So in general, network profit loss works like this. When you see spikes in NPL, let's just call it for short, when you see spikes in NPL, they point to periods of profit taking, or they point to the fact that on average, all market participants are moving their coins at substantial profit if we accept the assumptions that are being made by this metric. And then on the other hand, when we see these dips in network profit loss, like we saw here and like we saw here during both bottoms for Bitcoin and several like sort of short-term bottoms, that points to the fact that on average, most network participants are moving coins at a substantial loss, right? So in general, it would point to short-term holder capitulation. When people are selling it and realizing, consciously realizing losses, it points to a growing uncertainty about the coin's short-term price potential. So like we said, this metric in particular does seem to, and I'm going to zoom into the last 2 years, does seem to work better for some coins like Bitcoin than for coins like Ethereum, which have a variety of different use cases. So you can't really say that the last time that the coin was moved necessarily means that it was purchased, and that the next time that it moves, that it was sold, right? Because it can, there can be so many different use cases for particular altcoins that could kind of explain or justify moves on the blockchain. Whereas for Bitcoin and a few other coins like Litecoin, for example, it's a lot less diverse in terms of the amount of use cases you can use for it. Obviously, these days, and especially if we see sort of the proliferation of DeFi protocols and the amount of tokenized Bitcoin and Ethereum rising, this metric will also become probably a bit less reliable, because when you see, a lot of people moving their BTC into WBTC and REN BTC to interact with DeFi protocols, the more that happens, the more you need to take this metric with a grain of salt. However, that being said, what we tend to see for this particular metric are two things. In case of Bitcoin, it seems like these sort of major dips in NPL, like it happened here, 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 obviously during the Black Thursday crash, and then here, although relatively smaller, it's also earmarked several local bottoms for Bitcoin as well. So these major dips in network profit loss point to wholesale holder capitulation, point to market-wide efforts to exit a particular coin, even sell at a loss, which usually tends to kind of point to undervalued conditions for a particular coin, right? Especially if you believe in its long-term potential, and tend to mark local bottoms. So I'm going to zoom in now a little bit just so you can see it on a more granular scale here. Yeah, there we go. So, for example, you can see them on a lower time frame also coincide these drop-offs in Bitcoin's network profit loss here, as well as here as well, and then during the September 1st to sort of 5th, even 10th period. So if we take this line, if you look at the amount of times that network profit loss for Bitcoin has dropped below this particular threshold, this is around zero, right? So whenever it dipped below zero, pointing to people realizing losses on average, it usually tends to show undervalued conditions, and does have a tendency, at least in the past it had, to coincide with short-term price recoveries. Okay. Now, on the other hand, let me delete this and look at the last 2 years again. Go ahead, Max.
I was just checking because the current price action. I was thinking to, and I will apply this exactly this indicator for spotting the top.
Okay.
And I can give some interesting hits idea. Yeah. Can you narrow down the selected range maybe like for half a year and move it back to 2017? I will show you one thing. And,
so wait, you take the last 6 months, but also move it to 2017.
Yes. So that we see, you know what I mean?
You want to do like 2 charts?
No, one chart, but just show what happened at the top of 2017.
Okay, let's do that first then.
Yes, like this here. And you can do it a little bit smaller because you don't see it here. It's too big.
Like here?
And smaller, like from July 17 to March, something like this here. Okay, yeah, it should be nice. Now, well, you can do it even smaller, but anyway, I will show an idea and you will understand. And the main thing with network realized profit loss at the top, people will stop taking profits, or there will be strong divergence. Like you see here that price was pushing up, and we did see very nice profit taken on previous tops. Like I think it was September and October and November. But then at some point of time, yeah, exactly here, it was much lower, like 2 or 3 times lower than before, because this is where moment people believed, okay, this is indeed new paradigm. I better hold my precious Bitcoin. Yeah, and the only one spike thereafter, it was somewhere, I think, February. Yeah, that was the last smart money who realized, okay, that's it. And then very long time, there was no profit taken, there was only loss taken. And the one, they use the chances a few more time, and that's it. So keep in mind, we will see a similar pattern. And as I was checking the current data, it looks like this. We see strong spikes. And yeah, this is the most, yeah, so No investment advice, but at the moment it still looks okay. People taking profits. They're not sure it can go much higher. And as long as there is enough doubts in the market, it can actually go higher. But you need to check this metric just daily. And the moment you see we did new high, but it was less and less, or people took like 2 or 3 times less profits than in the previous highs. That's it. It's the last, so to say, chance to leave. You might be lucky; it can push higher, but I would pay to this along 3 or 4 others. I don't know if we will cover it today, but this is one of the key indicators to pay attention in the current bull run.
Yeah.
Okay.
It's the same thing like Max said a minute ago. So it appears for Bitcoin in particular that previously or historically we have seen a sort of healthy profit taking throughout the rally, and it's only when we see this profit taking start to diminish, like I don't want to like draw trend lines or whatever, but um, when it starts to diminish, it seems like when the crowd is sort of becoming more and more acutely confident in Bitcoin's price performance, we seem to start dropping. Like we've seen it here as well. We've seen it in February. Obviously, this is the Black Thursday crash, but even beforehand, we had a correction for Bitcoin when there was sort of a lack of profit taking starting to take place. Similar thing we've had pretty much the whole second part of August without a whole bunch of profit taking place, and then as a result, or eventually, we started to correct as well. So this is one way that we've seen Bitcoin in particular being kind of, the price of Bitcoin coinciding and interacting with network profit loss. Now, like I said, uh, in particular, network profit loss seems to work very well for things like Bitcoin. We have seen, for example, let's see IFI. We have seen interesting patterns, at least, for network profit loss for altcoins like IFI. Although, once again, it needs to be said that you can't really be sure for coins like IFI, which, whether they've been put into a particular yield farming protocol, or whether a move on the blockchain really means that they have been sold. However, if you accept the assumptions, which are very broad, that are being taken or made by this metric, once again, we see sort of major lows in terms of IFI's network profit loss, pointing to the fact that people are selling at major losses, coinciding with various short-term breakouts here, 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 and here. And for small coins in particular, I seem to see a lot of times that these sort of short-term profit spikes tend to, unlike with Bitcoin, tend to kind of just tank the price. So for something like IFI, or we can also look at, I think, Uniswap, it seems like it has a more immediate effect on the price. Low cap coins seem to have less of an ability to interact or to counteract this metric. So this is like a proof of concept of how I see it very often. An extreme example of how I see it work for altcoins: major spikes in profit taking before a correction, major drop-offs in its network profit loss right at its all-time low. So this, for example, I think we even covered it in an insight. This was such a substantial decline in Uniswap's network profit loss, coinciding with a almost immediate breakout, that it's at least it's interesting to note, right? And we've seen a similar sort of dips into negative territory during local bottoms here, here, even here before this slight correction. So yeah.
In Uniswap, it's especially interesting because similar to a few other tokens lately, who are doing kind of over airdrop for your participation in the network in some point of time. For people, it's kind of free money, but free, but you are greedy still. Now, at some point of time, when you say, okay, it's free money, but I get nothing, something and nothing, then you see these spikes because the data is you claimed your reward at some specific price, still free for you, but the platform will notice, okay, these tokens were kind of acquired at this price. But then you say, okay, enough, but something's nothing. And this is exactly, as we all seen it many times in our life, when they say, okay, but I take my profits now, Oh, but I close it. I cannot bear the pain anymore, emotional pain. This is the way market turns around. It happens again and again, and we like this metrics. Well, we don't like when we feel sorry and pity for people, but this metrics is just reveals
Right.
this one and others. Yeah, this is how it is. Yeah, it happens to us too. Sometimes I feel very tempted to sell, and a few times I did sell. But we're all humans, and the charts and data emotionless. It just shows what people are feeling. Yeah.
Right. Right. Okay. We are about 45 minutes in. I wanted to cover MVRV as well. Guys, I'm going to just sort of take about 5 to 10 minutes talking about MVRV in general. And then in the meantime, anything that we talked about today that you are unclear of, or any additional questions that you have about how to analyze speculative demand on Sandbase, any sort of questions you have about our platform in general, especially people that are new to our platform, let us know in the chat, and we'll answer it in about 5 to 10 minutes. All right, and then we'll end the stream. So if you have any questions whatsoever, let us know in the next 5 to 10 minutes while I talk about MVRV, and then we can get to them after the this particular group of metrics. Okay, so MVRV. So MVRV is probably one of the more popular metrics for analyzing sort of a risk of sell-offs or a potential bounce back for a particular coin that has been, I think it's been introduced about 2.5 years ago, and a lot of on-chain analysts seem to quite enjoy it, and it's fairly easy to see why. So MVRV, you will find it by navigating to network value and then moving to MVRV, and you'll notice a number of different MVRV metrics, and I'll explain in a moment what they are. So in general, MVRV shows the average profit or loss, so similar so far to network profit loss, right? But the difference is that the MVRV shows the average profit or loss of all Bitcoin holders, or of all addresses that have acquired Bitcoin in a particular time range. So in the case of 30-day MVRV, you can see that this particular MVRV shows the average profit or loss of all addresses that have acquired BTC in the last 30 days. So in general, this metric basically points to the average ROI of short-term Bitcoin holders. And the way it works is fairly simple. So for example, here we see 30-day MVRV peaking at about plus 14.2%. So that means that on average, at this point in time, all addresses that have acquired Bitcoin in the past 30 days are up plus 14.25% in their initial investment. So there is a significant amount of unclaimed profits by these addresses, right? And then as we dip lower, like for example, we went here to as low as minus 16%, I believe. Yep. That means that on average, short-term Bitcoin holders are minus 16% on their initial investment. So there's a number or a lot of unrealized losses, unclaimed losses that they are acquiring, so to speak, at the moment. So how does MVRV work as an analysis tool or as an evaluation tool? In general, most on-chain analysts use this metric in the following way. The higher the MVRV gets, it means that the higher the average profit margins are for a particular group of holders. In this case, we are looking at short-term holders. We can look at the long-term holders in a minute from now. So the higher the MVRV, the higher the profit margins, and the more likely it is that these particular groups of holders are going to start selling their bags, claiming their profits, and exerting strong sell-side pressure. So the higher we get, the more overvalued the coin is according to this metric. And then on the other side of the table, the lower the MVRV, like for example here, right, the less incentive there is to sell, especially if you're like minus 27%. Everybody that wanted to capitulate has kind of left the train at the moment. And the lower the MVRV is, the less incentive there is to sell, and in general the market or the coin is undervalued according to MVRV. So it tends to point to a potential times to accumulate and look for an entry position in a coin, because according to MVRV, it looks undervalued, right? Now, in general, the way that you kind of look for danger zones or bounce back zones in MVRV is to simply look at historical trends. So you look at what has historically been marked as a potential quote unquote danger zone for Bitcoin in this case, as well as quote unquote bounce back or opportunity zones, right? Because the problem with Bitcoin is that, or with MVRV in general, is that you never know how high or how low we can get. Like, are people going to start claiming profits at 25%? At 15%, at 27%, or at like 7%, right? So the way that you use this metric most often is simply to look at historical trends and look at particular points in time that people, or in this case short-term Bitcoin holders, were comfortable with taking and claiming some profit. So for example, if we draw a line here, we can see, minus a few outliers, which don't tend to live that long. It's only like a few days before we drop back. These seem to be periods of excessive unclaimed profits by short-term Bitcoin holders. And these seem to be, or have seemed to be in the past, this is a 2-year view, or almost a 3-year view now, these seem to be patterns or periods at which short-term holders like to start claiming some of their profits, and the price tends to dip in as a result. So currently that's about 20, between, I would say between plus 15, above anything above plus 15% is usually pointing to increasingly risky conditions to enter into a coin according to MVRV, because there's a lot of money sitting on the sidelines, or a lot of profits waiting to be claimed. And it seems like in the past, this is the sort of time during which short-term holders were happy to start claiming profits. And at the moment, we are sort of approaching these danger levels once again, right? And then on the other hand, when you look at short dips in MVRV, or historical dips, you want to analyze previous lows. Now, this usually, like, you will see this massive drop in Bitcoin's MVRV during the Black Thursday crash. So I kind of tend to ignore that one because it's such an outlier. But it seems like anything below like 19%, and especially as we drop below 10%, it tends to seem to have sort of this period of short-term potential of a short-term price recovery, right? So like I said, in general, the problem with MVRV is that it can always get higher, it can always get lower. The way that you kind of offset this is by simply looking at historical trends and figuring out at which levels we have been likely to drop or to rise in the past. And I can show similar things for Ethereum. This is Ethereum. I think this is 1 year, but let's take a higher time frame. And by the way, MVRV will usually flatten out over time, like you see here, for example. So don't expect 2017 and 2018 MVRV ratios to ever repeat themselves, because market is maturing and they are more and more sort of becoming risk averse in general. So you're not going to expect to see like plus 40% in people being plus 40% in profit that often. Usually these metrics tend to kind of flatten out over time a bit as the market becomes more risk averse and more sort of trigger happy earlier. So in case of MVRV, the 30-day MVRV, we can kind of see these sort of periods. Oh, one sec. These sort of local bottom periods. So in July 2017, September 2017, October 18, and March 2018. So obviously this is a more of a long-term indicator, or can be a more of a long-term indicator. And it doesn't necessarily, if you only use it to or rely on it religiously by looking at ultimate bottoms, you would miss several bounce backs, obviously. So that's, like I said, the problem with MVRV is that sometimes we don't necessarily need to hit absolute lows. We can bounce back earlier. In general, sort of the rule is the lower we go, the more undervalued we are. So if you are, for example, here and you like what you see in other metrics in terms of fundamentals, that means that you could consider entering into a position. But the lower we go, the more undervalued the metric is according to this indicator. And if you believe in the coin's short and long-term potential, it could be an interesting time to accumulate. And then on the other hand, these are in particular seem to be, especially in the last, so this is from August 2017. Oh, actually I haven't, I've been, I haven't zoomed in enough. There we go. I was like, yeah. So this seems to be the bottom for Ethereum's 30-day MVRV. So about minus 25%. March 2018, August 2018, November 2018, July 2019, and then obviously during the Black Thursday crash, we dumped even lower. And then as far as it stops, Ethereum seems to be quite disciplined so far in 30-day MVRV in terms of its stops. So it seems to like to peak at about 27 to 30%. So when you see these levels, and we've seen them in April 2018, January 2019, May 2019, February 2020, so even like a month before the Black Thursday crash, and then once again in August 2020, these point to high unclaimed profits by short-term Ethereum holders, which tend to not last for very long and tend to lend themselves to a short-term price correction. So this is as far as the 30-day MVRV is concerned. You can use also, and I think it's very important to use long-term MVRVs as well for this. So for analyzing the average ROI of long-term Ethereum holders, we would look at the 365-day MVRV. So all addresses that have acquired Ethereum in the past 365 days. And you will also see, especially when it comes to local tops, that this is sort of the scale for Ethereum's 365-day MVRV. We can look at it here. So somewhere about 66%, plus 66%, usually seems to be fairly overvalued in terms of Ethereum's long-term holders and their relative profit margin. So we seem to be slowly but surely sort of navigating to these levels, both in terms of 30 and 365-day MVRV, not just for Ethereum, but for Bitcoin and other coins as well, which tends to point to, and it doesn't necessarily need to be sort of a long-term correction. You can kind of just correct for a few days just so we can drop back into sort of normal territory here before we bounce back once again. But yeah, when you see these levels, it can be a yellow flag, especially if other fundamentals agree. So I think we are going to end it there as far as our exposition is concerned, guys. Let us know if there's any additional questions. I see Klaus asking us one thing in chat, and then so let's answer Klaus's question. And if you have any additional questions, guys, write it in the chat now. Otherwise, we are going to share this list of webinar links in the Sanbase Pro group for everyone interested to see. So Klaus says, dear Sanbase team, I often wonder about these metrics when it comes to small niche coins. Nexo as an example. Yeah, Nexo is, I think it's the best performing coin of the day, isn't it? Isn't it like plus 30% or something? Let's see. Now it's plus 16%, but look at this. Yeah. So he says, I often wonder about these metrics when it comes to small niche coins like Nexo. So how do you deal with coins that don't speak as much? I.e., how do you interpret data? Max, what do you think? Want to try answer this? So how do you deal with coins whose data doesn't necessarily have as much activity, I guess? So for example,
well, I think he means maybe social data is not so much same, if I understand correctly. I don't know, Klaus, can you confirm in the chat? Are you talking about when there are coins for which we don't have so much social volume and stuff? How can we analyze it? Is it your question?
Or is it simply like,
because on-chain data is here, it can be as simple, well, MVRV for them, it's not so reliable, but it can be as simple as coinage consumed and directive addresses. Maybe sometimes it's even enough if you open it for coinage consumed and directive addresses. not 24 hours, like normal coinage. Could
You
not
mean
normal.
normal addresses?
Yeah. So, and what is the directive addresses value? Like, is it like 100? Okay, well,
It
actually,
is.
it's actually quite. Nexo is have a very nice set of data. So as it's a big run, you will see the divergence here. If you increase it a little bit, like take the last 3 months, or you should see. You see on 10th of December, I think it was 10th of December, there was a top, and there we kind of built very high value of directive addresses. Now, if today or tomorrow we will not break this all-time high in directive addresses, you can assume the rally is dying out, or already has died.
Here we go.
Yeah, you see on the left side, 7 or 8 September 2018. So there was one top before the last one where it has very high network participants. Many people participated. It's a so-called point of recognition. Everyone is in, and it's typically a kind of middle of the rally. And then on the last top, it was obviously lower. Here we'll have the same, what should have. It's like happens more often than not. One example how I would do. I usually try to do as simple as possible analysis, because adding more metrics doesn't necessarily resolve the mystery. It just can become confusing. And for simple token, you'd better use simple analysis. All complicated metrics we've used so far, network profit loss, NAV, all of them, it's good for Bitcoin and Ethereum, bigger coins. For smaller ones, simple is enough. Because it's crowd, uneducated crowd with very clear pattern, they will be super excited in the middle, and then everyone is in, so it falls down. And MVRV, I wouldn't apply here at all. It's difficult. I don't know. I don't know where to say when it's much. But once you see the divergence about price pushing, but there is no new blood, obvious sign. Yeah, I would use simple things. Directive addresses, and maybe also new addresses. You can also use.
Right.
Yeah, maybe you can use MVRV, but I would stay away personally. Maybe it's
Okay.
just I'm not so professional at Dino MVRV. Maybe that's the reason.
No, I think you're right, Max. For some coins, especially like low cap coins, I think it's good to go simple, like using things like daily active addresses and age consumed. I think, yeah, MVRV maybe doesn't help a whole that much, but I still think like usually I like to look at these levels, things that so. MVRV and in general on-chain data, it isn't like, you know, once you break a resistance or a support trend line like this one, you know, it's like it's super dramatic. I think, you know, when you see these levels, if I were here and I saw that we have several times in the past we have kind of dipped at these levels, and if I saw other metrics that kind of look similar in terms of, okay, maybe there's a little bit of fear in terms of sell side pressure, but there's a lot of addresses interacting with the network pointing to, you know, high participation but low sell side pressure, something like that. I would consider making a position in it, right? And then as far as currently, I think, yeah, it would appear that currently, at least according to the 30-day MVRV, we seem to be overvalued as far as Nexo is concerned. Now, like I said, these levels are 2.5 years ago. So you need to consider that they tend to flatten out over time. So the fact that we are now very high like this would make me at least a little bit concerned, right? But like Maxon said, I would look at and these levels as well. Like it seems like Nexo likes to top as far as its price action is concerned at these levels. Now you are right that you would probably sort of miss this last couple of days of price action if you were only relying on MVRV. But in general, this is how the metric works, and the more data there is for a particular coin, like the more historical data there is for a coin, and that's why Bitcoin and Ethereum has such a success rate with MVRV because there's more data to compare, the better. So for coins that have only been around for a couple of years, it's not the greatest indicator to use. I do agree. So yeah, Max, like Max said, maybe start with today. The talk was mostly about how to analyze sell side pressure and speculative demand in a particular coin, and these are some of the metrics that we would use. And then I think in a follow up webinar we can kind of look at Max, maybe things like daily active addresses and age consumed, and how you can use them to spot movements, especially in like mid and low cap coins, because it seems like they tend to have a more pronounced impact on the price. All right, I think we're already an hour and 8 minutes in. So guys, thank you everyone that stuck around to the end of the stream. This will be shared in the Sanbase Pro group after the fact, once we edit it. And if you have not already, be sure to check out app.santiment.net, although most of you should have a Sanbase Pro account because this was a pro webinar. In case you don't for some reason, definitely make sure to check out app.santiment.net. There's a 2-week trial, and then afterwards it's just $49 a month for a monthly plan. Everything that we've discussed here today and a lot more is available, not just for Bitcoin and Ethereum, but a number of different mid-size and low-cap coins. So if you want to kind of analyze the market, not just from a particular perspective like price-related data, but also from a variety of different sources of information like social development and on-chain activity, Santiment, I think, is the most comprehensive data provider on the market. So thank you all for sticking by till the end. If you have any additional questions, just ping us in the Sanbase Pro group. Both Max and I are just going to kind of move over there right now. So any additional questions, just ask us there and let's keep chatting. Thanks, and we'll see you in the next webinar, which should be in about a month or so. So after the January break or the New Year's break passes by, we are going to be holding another webinar, especially for private for Sanbase Pro subscribers. So Max, anything you want to add before we sign off?
Just as we started, build the skill to be able to build for yourself the context so you understand where the crowd is. We build the platform further so that we can provide a more detailed view. What is, for instance, or to split clearly, this is the crowd, this is the smart money or long-term investors we're working into. It will give you even more edge. But in my experience, as the markets are crypto markets, except Bitcoin and to some degree Ethereum, they're very, very inefficient, and the vast majority of participants are uneducated. So you don't need much to know how to build for yourself context. So what we have metrics should be enough. And this is important. And don't fall into, don't become victim of, okay, this metric worked in one way for Bitcoin and Ethereum, so we should work in the same way for others. No, there are differences. It's all about understanding what is behind. What is behind this directive addresses or transaction deposits to exchanges. Once you build this habit, it's much easier. Then the rest of the metrics will just do the same job. Okay, I think I know what the crowd is doing. Are they still excited, or are they now over confident, or are they worrying? This is important. So you should read these words. What is the participants? Are they worrying, excited, reluctant, boring? Yeah. Once we can do it to some degree, then everything becomes good. But it takes some time. Yeah. Don't worry, it can take some time. The good thing is 95% don't even bother about building the skill. So they just look for magic groups with magic trading signals. So I'll leave it for them and try to build the skills. Good, that's it. Just to finish where we started.
Thank you, Max. Thank you, everyone. We'll talk to you in about a month in another webinar. And then in the meantime, let's just chat in the Sanbase Pro group. Signing off, Dino and Max. Bye for now.
Bye for now. Bye-bye.